The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. This is the second day of November, and we're looking at a Dow that's up 13 at 23,448. The E-mini is down 2. Now, this is going to be very interesting because the E-mini, I've got this as a potential peak F. And yesterday we had the semblance in the IWM of a Chapman Wave Rogue Wave. I don't want to go into that. If I have time, I'll try to go into it a little later. Tomorrow's Technical Friday. Maybe we'll spend some time on that particular Chapman Wave technique. Suffice to say that at 25.69, that's the 9-period exponential moving average. I need to see a close below that by the end of the day today to say, hey, now we've got technicals very poor, stochastic, MACD is not good, stochastic is not good, on balance volume was good, but now it's pulling back. So when there's an isolated move in the price, but it is not confirmed by the technicals, one of the two has to give. So either the technicals are going to rally to then confirm the price move, or the price move is going to come down to confirm the technicals. Day's young. Let's see what happens. So S&P 120-minute chart, E-mini has gone from a peak E at 2585.50 to the low an hour or so ago at 2562.25, 23 points, big deal. It's nothing really. So we'll be watching it closely on the 120-minute chart at 2577. That's about another 4 points from here. If there is a move as high as that, that's going to be a very good one. I said to my subscribers this morning in my opening call newsletter, it said that if there is at 11:10, 10 past 11 Eastern time, if the Dow was up 40 points, that would be really good action. If it was down 40 points, that would say, uh-oh, good chances we're going to be closing down by the end of the day. Instead, we've been trading in a very narrow band. So now let's go through this, and we'll continue to the S&P cash, SPX.X. There we go. S&P cash is down 3 at 25.76. There is 25.71 at 25.76 right now. It has to drop more than 5 points, and that'll go under the 9-period exponential moving average by the end of the day, and that'll be a big negative. I've got this as an F. If there's a new high, boy, I'm just going to have to say, we could even go higher, because I'd have to give that an alternate count of G/C, but showing that kind of positivity, not closing under the 9-period moving average for 1, 2, 3, 4, 5. This is the 6th day when, in fact, there's been a choppy sideways move. That I have to consider that that's positive action. So for my subscribers, my newsletter, what we've done is we have only the one short. We have the Dow small short. We have an intermediate term long position small, long from the 22,290s. We're at in Dow 23,450s. So that's very nice, a little bit of a cushion there. So short term, I'm expecting chop, slightly lower lows and slightly lower highs until there's a really strong move below 23,250. That'll be a signal to say, okay, deeper correction coming. It's not there yet. Okay, let's go to the QQQs, because the QQQs have been very weak all day. They're down 66 cents at 151. This is the Power Shares QQQ Trust Series. Now, this has gone to a leg. Finally, it's gone to a leg D. It's actually a peak D in the 120-minute chart. And I do have to put in a down arrow to say it's in a sell mode, but that's only the 120-minute chart. The daily hasn't even given a sell signal yet. Peak E probably. Make it real simple. In the next, by Friday at the close, because it's a weekly chart I'm looking at, the technicals in the weekly chart are still very good. The stochastic has turned down, but it's still at 96%. That's really strong. The daily is the one that I'm really looking at, 91% in the stochastic. MACD is good. If there's a close in the S&P, the SPY, that is, why did I say that? I meant the QQQ series, under 150.30. 150.44 is the 9-period moving average. It needs to be a little bit under that. Any day, any time in the next 2 days, not only will that impact the daily, but it says that all of next week, 152.83 is going to be the high that has to be taken out, or else you make a peak in that weekly chart. So that's what we're looking at. You want to go to the IWM because that's the one that had very significant down move yesterday after going to 150.53, just 14 seconds from making a new all-time high, because the last high on October the 9th was 150.68. So sideways action, lower lows and lower highs, and then it makes this X formation, this open, expanding cone formation, breaks above it, but the MACD and stochastic were very negative. So it pulls back and it holds this, look, 3 times hit this little mini trend line. And trend lines are really important, especially when it's hit 3 times. And now the IWM is up 0.88. It's up 0.60 cents. The Dow's only up 0.12 cents, and the S&P is down 0.08. So all of a sudden, the IWM yesterday, I think it was a little earlier than this time, it was leading on a percentage basis and then led on the way down. Today, again, it's leading on a percentage basis. I'm watching this closely. Why? Because the weekly chart has held above the 9-period moving average, the black line there, of 147.15 right now. It's gotten close, but it hasn't hit it. And yet it hasn't made a high above 150.68. Those are the parameters. If there is a close in the IWM in the next 2 days, going into this time Monday, if the IWM hits 151, I have to consider that that weekly chart has used the daily falling axe formation for a 1-to-1 to the upside, which would take you to about the 151.35, 151.42 area. And that would be very positive for the weekly chart, and it will certainly help the monthly chart, because the monthly will then have extended leg E. Very important, and such a fascinating period, because you look at, for instance, Facebook is down 3.87. My suspicion was that with the news coming out, based on the Fed, based on the tax, based on the Facebook yesterday and Apple today, that Facebook and Apple could in fact start a consolidation to the downside, and the news could finally be perceived as negative, because until you get this overlay, this dark cloud over the market that says, uh-oh, this is what we're worried about, and the market pulls back with the volatility index, which is at 10.11, pushing into the 1180, then the 1230, and then the 13s, until you get that, that is the vernacular that you have to have for a bear phase to last. You have to have the futures open consistently, sharply lower, the E-mini S&P 12 or 13 points lower, tries to rally to about a -5 during the day, and then closes towards the low of the day. And it does that 3-4 times over a period of a week. We don't even today. We don't have bear market material. We have potential, and I'll tell you why. I hope I can remember this. Someone just, I've got it written down. I'll get to it. I want to look at ISRG. We'll look at some stocks, and I'll explain why. There's a chance that if we finally do get a very sharp pullback, that pullback could really accelerate, because so many people want to buy the dips, and this time they could be wrong, but we haven't got there yet. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. So just looking at the E-mini, it's gone to a leg C in the 10-minute chart. Went to a peak E in the Chapman Wave at 9 o'clock this morning at 25.76, round number high. Comes tumbling down, goes all the way to 25.62.25, and now it's trading at 25.74 in a leg C. This is a market that is having a tough time giving anything away. This is quite extraordinary. But it's still very selective in many ways. I'm going to go to Pat in Massachusetts. Hi, Pat. How are you?
Hi, Basil. Good morning to you. Or good afternoon,
morning.
rather. Sorry.
Oh, you're right. Now, are you from Cape Cod?
No, I'm from Rutland, Massachusetts.
Oh, very nice. Okay, good. So you were wanting to look at gold. That's Rand gold. Now, it's very interesting. I keep meaning to have a look to see Rand gold, because when I was a teenager, we moved from one of the most beautiful cities in the world, Cape Town, South Africa, to a little mining town near Johannesburg. It was called the East Rand. So the whole Rand had these different mines, and I grew up. In fact, my grandfather had a stone crusher from the mines of the stones that they dug up. He used to crush the stones. And I always look, I say, Rand gold. I wonder if it was near where I lived. Is that a mine that I used to traverse and ride my bicycle down those down the side of the mine? All right, so you're looking at GOLD. It's trading at 90.48. It's down 7.71, 7.85%. There must be something that's going on, some bad news. I don't know if it's earnings or what. But what are we doing with this?
Well, that's what I've been looking this morning at different areas to see if somebody could give me some information, and I haven't found anything, and I was just wondering if you have something.
I'll do it. I'm just looking at it right now. This particular news service is not always update. Yeah, it says there were no headlines found. Waiting for news headlines. I bet there is some news. They just don't have it. So maybe someone in the they are. Tom is saying they came out with their numbers last night. Yeah, it looks to me like a numbers thing, and must have been a big miss, because this is not good. So we get Q3 earnings and production. So I tell you what I'm looking at here. One of the reasons why I've found that, for instance, when Tom does his work on the gold stocks, he really does an in-depth study so that he understands where they are, what they're doing, what country, what part of the country, the capabilities, the mining procedures, as well as how many ounces they produce, etc. And I think when you're looking at something that is a commodity and there's so many tentacles out there. One of the reasons why I often try to avoid the gold stocks, I might pick up a little one once in a while, but it's because of this very thing that it's really difficult to gauge exactly what's going on. So sometimes I look at I don't usually use GLD, I use the IAU. It's the GLD trades at 1/10 the price of spot gold, and the IAU is 1/10 the spot of the GLD. So it's just a lower price, same percentages, etc. But one of the problems with a stock like this is when it gets hammered like this. For instance, it was one of those that was holding. If you look at the monthly chart, it actually had a better monthly chart than many, and it had this doji kind of candle from last month. It opened yesterday. It was holding steady. Bam! This is terrible because it's really broken all the trends on the shorter term. So one of the things that I would be doing if I was you, so you don't have any position at this point. It's just something that you noticed and you've wondered what's going on.
I do own stock in it.
Oh, you actually do own. Okay, well that's what I meant was when I said what are you doing. So okay, this is now very difficult. For instance, if my immediate response when I see something like this is just to get out and then ask questions later for two reasons. One is, yes, you could have a turnaround candle tomorrow, you could have an inside day, and all of a sudden on Monday you could have a very nice bounce. But if there is follow-through negative action and it starts to trade it's at 90.39 and it starts to go to the 88 level, then that's just not a good sign, because what's next is 85 is the 200 period moving average in the weekly chart. Okay, let me think this through here. You're in the position, it came out with negative earnings, it was looking good. At this particular point, if you get out, you're going to have to take a loss. And the big thing about this is that I have to look at it on a monthly basis, because I have to assess to say, you're given a little time, is there a pattern here that says, you know what, when gold really gets back on track, and I think a little later on, maybe this year, it's going to get back on track, but my longer term target for gold is much, much higher. But in the meantime, I think the dollar is going to lead for a little while longer. But the way I'm looking at it is the whole 88 to probably 83 level is going to be really important support. If it can handle that, if it can hold well through the next 3 weeks, and then gold starts to move much higher, it might struggle to get going again because it'll be an unfavored stock, but it might be dragged up. This is very difficult, because if you have a longer term outlook with many of these gold stocks, there's a repairing period when you can see every one of these big red candles eventually is trying to come back to get back into that red candle. Even the horrible turnaround from 2012 where it hit 127.27, it goes all the way down to 54.88 in September of 2015, makes this beautiful cup formation, retests the high, just fails under 127.27, it goes to 126.25, and then breaks down. So, oh, whoa, let me see, someone just said, shares in Randgold Resource Limited fell 4.4% to 71.20 pence as third quarter, that must be South African rands, quarter profit fell due to lower production following a planned decrease in gold grades at its Lulo Guancoto project in Mali. Oh, that's in Mali. And as gold prices fall, third quarter production fell 9%. Ounces of the main negative surprise was the increase in total cash costs. Oh, I don't like it when it comes to costs. Driven higher by TCC. Okay. Yeah. Oh, boy. Okay. This is what I'm going to suggest to you. I would not like to just tell you to get out. Personally, when anything like this happens, I'm done, I'm out, and I'll reassess. I can always get back in. If I'm wrong in getting out, I deal with it, and I just I have to make it up. But I am going to say to you two things. Yeah, are you down more than 10%?
On this right now?
Yes.
Let's see. Hold on.
Unless you've held it for a long time, then you might not be.
No, I take this gold by your advice when I listen to you talking about the gold, because I've been in Rango for quite a few years because of listening to you. And, but all of a sudden this year has just kind of like snowed me, and I just lost what to do.
There's a break. Hold on through the break. Let's talk. Let's go through this rationally. I don't want to do anything decided here. Let's just think it through, and I'll be right back after the break.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and we're on with Pat in Massachusetts, and we're looking at GOLD. That's gold. Rand gold is the symbol. It's trading at 19.51, down 7.68. And the chart formation says that it should come into some kind of support around about the 88 level. So I'm going to do this. Pat, I'm going to ask you two things. One is, I'm going to say, because it's already down almost 8% on the day, that is from yesterday's close, another 2% isn't going to make 2-3% even isn't going to make that much difference, because if you're going to take a loss, I think always think within the 10 to 12%, or if it's somewhere around there, that's make-upable. When it gets to the 18 to 20%, it's just so much harder to do. So this is what I'm going to say to you. Figure out what the percentage is, and I would do this at this particular point at 19.56. I would take a little bit off. Whatever position you have, just take something off to say, hey, this I've locked in as a loss. Case closed. It's a done deal. And then I would like for two things to happen. One is I'd like to wait Friday into Monday. Call me Monday if you can. Let's look at it again, because if it hasn't had what we call an inside bar, in other words, yesterday doesn't take out today's low, says it tries to bounce a little bit, because as I read this report, there are some things there that I don't quite understand, but it seems to me that this was something that you could expect, but it wasn't announced. So I don't like things like that. So I'm a little concerned in that regard, but 88 is the level that I'd be watching quite closely. So if you're prepared to just take a little bit off here, just to say to yourself, hey, I've got to have money management. That's part of the game. But looking out longer term, my monthly chart hasn't really changed that much yet. The weekly is not looking too good. So if you're prepared to do that, that's the whole first part of what I'm saying. The second part, it's actually a three-part thing. The second part is, if you have a chance, why don't you call Tom O'Brien, who's the expert in all the gold stocks? Call him this afternoon in his show at 3 o'clock, another couple of hours. Give him a call. Just ask him, what is his opinion on what was stated, what the stock is doing, and just his general opinion about what he thinks is going on. And the third thing is, let's talk again Monday, regardless of what happens. Let's look at it again Monday, because if it's starting to hold quite well, we've got to prepare that there could be another leg down. But at the same time, a good bounce would give you also another reason to take a little bit more off. I would prefer that you're much lighter in this whole position in the stock than to be heavy like you are. In other words, have a full position right now. I'd much rather you take some loss, and if you want to keep it as a more intermediate term buy and hold, hoping that when gold itself starts to get to its next big move up, GOLD, Randgold Resources will participate in the rally. You can always get back in if it starts to straighten itself out. But if it starts to drop under 88, 85, that area, whoo, this thing can go down much deeper. So I would like that you take something off, and then let's try to reassess. But I would also recommend give Tom a call. Get a little bit more information from the expert.
I will definitely take your advice, as always.
Well, thank you very much.
I'm down 7.73% right now.
Oh, okay. So you're down about approximately what the stock is down. That just gives you a little bit of room to think about it, but I am still going to recommend take something off. You can always make back 8%, 10%. That's just part of the game, but holding it through a 15% or more decline, it just sits on your head and it interferes with your thinking. So that's what I'm saying. Just get rid of some of it and feel like, whew, that's a relief. Now I can deal with it, whatever happens.
Well, I want to thank you very, very much. You are a special individual.
Well, thank you very much. I appreciate your call, and let me know how it goes.
Right, and I will be calling Tom also, and I will talk to you Monday.
Thank you very much.
Thank you very much for all your help.
Thank you, Pat. So,
have a good day.
Have a good day to you, too. So, folks, let's do a couple of things here. I do want to answer some of the questions, but I do want to go to gold itself. Gold itself is, it was up about 7, now it's down about 0.5 point. I just don't think it's quite ready yet. I think there's another little bit of I'm not going to call it a whoosh, but I think that 1267-ish, 1262-ish area, maybe it has to touch that, and then maybe it'll be ready, because it needs a little bit more time. And I'll tell you the reason why. When you look at the EUR-USD, the euro-dollar currency pair, see, it's trying to rally. It's having a very difficult time. The weekly chart is still not a good-looking chart just yet. If you look at the dollar DXY, it had a nice rally pull back, and now it's coming back again, holding the 9-period moving average. I think the dollar is going to be moving a little higher. If the dollar breaks above 95.15, it goes to leg D. But the higher it goes in this move, the greater the chances are it's going to touch the 200-period moving average in the daily of 95.62, and then we're going to have to reassess. So that's what I think dollar has preference right now in my work. For my subscribers, we've been long since the day of the low of the 8th of September, and I'm treating it as a decent counter-trend rally. I'm still calling it a counter-trend rally based on the monthly chart. Question in the den about Bitcoin. Every day I've forgotten to talk about Bitcoin. What I wanted to say 3 days ago is that Bitcoin was looking really good, and it just took off. This is GBTC. That's Bitcoin Investment Trust. So this is not Bitcoin itself. This is a trust based on it. It's trading at 927. It went all the way from 1,000 and what was it, 50 or 40 or something, way down to the 600 area. And now it's up at 927. Huge moves. This is I'm calling leg B. And as such, I think it's going to go a little bit higher. A question I had about was ISRG, Intuitive Surgical, trading at 382.73, up 6.69. And then I also had a question. So Tim asked about that. He said, good morning, Basil. I would like to get your analysis on going short ISRG. I have no position right now. Thanks, Tim. Tim, be a little careful. I agree with you. This looks like a good candidate, but treat it only as a candidate. Now, I did want to talk about something. Sean had asked me, daily overview. Did you stop that? So I had said, because of last week, because I did so many fewer charts every day, I said to myself, for months I've been saying to myself, I do redundant work. I do analysis on the Dow daily, analysis on the Dow 120-minute chart, an analysis of the E-minis in great detail, each one in great. I do an overview where it has all these different charts plus the VIX and the TRIN. I said to myself, I can't repeat the same thing over and over when at the close, before the close even, I'm pretty much in my mind. I've already decided what's going to happen the next day. I've done this every single day on the Dow for the last 30 years or more. I write it out because I know my subscribers want to understand how the Chapman Wave methodology works. So that's what I do. I just can't give it that kind of time. And I found it was taking away from what I really wanted to do was to look at more stocks. So over the last week when I was on vacation, I still did my opening call every day. I just didn't do my target conditions hour. And then I said to myself, you know what? I'm going to have to stick not do my overview and market today section every single day. And that's this thing right here where I almost had it ready for today and then I decided not to do, where it has the 120-minute Dow, the 120-minute VIX, the short-term trading index, the Richard Arms index that I use in a very different way, the daily Dow, the daily SP, and then do a whole overview of what's going on. I decided I'd do that already when I'm doing my analysis. So I will do it, but periodically.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So I don't get out of order again, let me just go back to ISRG. What I was saying is that for my market today overview and market today section, I will be doing it, but maybe just once or twice a week. And it'll be when it's important, when I get a reading in my Chapman Wave trend gauge or the VIX or whatever it is, or I get that pattern that I look at where I'm getting a cup formation in the VIX and an arch formation in the Dow 120-minute chart, and they are going to now go together or go away from one another, that type of thing. But I don't want to do redundancy. I've done it for. Can you imagine? I've done my newsletter for here at TFNN for over 13 years, and I've done this overview section every single day. Can you imagine? 5 times a week. Plus on the weekend, I always do it, but that's for the Monday edition. So 5 times a week, 52 weeks a year. Start multiplying it, and you'll see how many times I've done it. I needed that time, and I used that time, I think, very judiciously. For instance, the reason I'll get to ISRG in a minute, but the reason why I wanted to mention this is that, for instance, I've had more time to look at the stocks that I want us to get into. I was determined a stock that we missed 3 times. I was determined to get into it, but I was very determined also to have the price that we wanted it, which was a little higher than the original price. But since it's in leg C and should go to D, I said, let's buy this at particular stock at 31.50 today. Yesterday it hit 33, it went to the 33s, had patience. We got it at 31.50 and it's trading now at 31.88, up very nicely. And it gives us a little bit of a cushion. So nothing great about it, just means that I had the time to decipher exactly what price point we wanted it at. It was just off the low, and now it's moving very nicely. So I think I'm using the time judiciously. So I hope you don't mind. I know subscribers, I've had a couple of questions about it. I will do it, but I'm going to do it when I think it's necessary. That's the one thing that I'm going to do. So the reason why I wanted to mention ISRG, and because it came up here as a question from Tim, is it's in leg D in the daily, all-time high. It's in leg F/C in the weekly, all-time high. Obviously an all-time high in the monthly intuitive surgical Da Vinci equipment. This is for surgery, a special way of doing surgery. Very expensive, but it looks like hospitals are still buying it. Now, this is what's really important. Yes, it's a candidate for a short, but stocks that are making highs tend to continue making highs. That's why I've been very, very fussy about one particular index or sector that we went short and took a small loss, even though it was the correct move. And today it's going to by between 3 o'clock and 4 o'clock. I think it's 3 o'clock and 4 o'clock, or 2 o'clock and 3. It's going to give me exactly what we wanted to look at to maybe go short that particular index. And I'm being very fussy. So be careful. ISRG is in the sweet spot right now for a number of reasons. The biotechs are getting hammered. This is surgical, medical. So I'm going to say, Tim, hold on, but please remind me, it's in leg D, everything's positive. It's going to be a market pullback that does it. But remind me, let's look at it. Just email me again Monday. I don't want to do anything tomorrow. Give me Monday or Tuesday. Just say, hey, how about ISRG? Now, the reason why I'm saying that I believe if we start to really take on water in the general market, if Apple comes out with bad earnings and all of a sudden this tax thing doesn't look like it's right, and the Fed, nobody knows, all that stuff, right? If that becomes a market negative, because of stocks like this vertical move in the monthly charts, a fantastic move in it's not vertical yet in the weekly chart, but these are the stocks that can come down very quickly. And once, for instance, at 382, if ISRG starts to trade at the 368 level, all of a sudden, there could be a really quick move to the 9-period moving average in the weekly of 360. So my contention is that some of these stocks are extremely overbought. I mean, look at Facebook, straight up. Look at this monthly chart. It's incredible. It deserves a bit of a rest, and I think it is going to get a rest. So I don't want to ignore it. It's better to short the stocks that are making new lows than the ones that are making new highs. But I know you're trying to time it like I try to time it. That's what we try to do. But hold off. Yes, it is getting close, but just hold off. Next question was AN. So here's another thing that I think is very important. AN, there's this guy that always comes on. He's always interviewed from AN, which is AutoNation. I can't remember his name. He's the CEO. How many times have I done my notation on AN? Forever I've done it. Why is it not there? Anyway, it's a huge move up. Gaps up today. And that's another reason why the particular stock that we bought, which is an IPO, is in this very area. This is AutoNation. It's trading at 54.52, must have had really good earnings, up 6.92. Very often he comes on and the earnings are quite good, but the market it keeps coming down. All of a sudden, you've got the monthly chart in A, B, C, I believe, D. I think it's in leg E with a very powerful move, a gap up in the daily to a leg C. This is a very strong stock, and it's telling me that the stocks like General Motors, which is had a fantastic move, having a well-deserved break, stocks like a Ford, which is getting better news, especially with their trucks. I think that we're looking at AutoNation as some kind of an economic bellwether, but at the same time, it's way off its all-time high. At 54.49, it was down in the 38 just a few months ago. Now it's at 54. But exactly 2 years ago, it was trading at 67.50. So this is really describes the vicissitudes of the auto industry. Now, there's a left side, right side price time match. Yeah, I don't want to take time on this. I'll try to do that tomorrow. AN is looking really good. I suspect that if the gap up low today of 51.05, it's trading at 54.46. If that is not taken out all of next week, it is going to give us a really good sign to say that there are certain sectors that are still doing extremely well, and the auto sector is probably one of those. And I'm watching it really closely. And if General Motors starts to drop 2 points down from here, if Ford drops a point from where it is, AutoNation should drop as well. So they kind of go together. I like it. So that's my analysis there. Bob wants to know about Federal Express, FDX. FDX is trading at 225.54, up 8 cents. It made a peak D in the Chapman Wave daily. It's got a peak E perhaps this week if there's no new high, and a leg E, possibly a peak E in the monthly. And here we are just about to go into the season of buying for the holiday season. You've got both Thanksgiving and then you've got Christmas, Hanukkah, the whole thing, the whole gambit. And I'm looking at this and I'm saying if Federal Express can hold 222 all of next week and not close under 220, I think that's a good sign. Let's see UPS as well. And I see the post office is now going to start having, they're talking about Sunday services. Sunday service. So Federal Express, UPS, peak F weekly, leg D, probably a peak D in the monthly. Wow. So UPS is not quite as strong as Federal Express. I'm watching them both. So if Federal Express at 116 breaks 114 support next week, not a good sign. If it manages to bounce and get to 119, 120, that's going to be a good sign. So we should look at Amazon trading at down 11 at 1,092. I think that was a spike high. I think it's going to consolidate Amazon. I think we're in for a consolidation here. That's the way I'm looking at it. I'll be back. Basil Chapman, Tiger Technicians out. Dow's up 33.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Yep, don't forget, Steve comes up, then comes Dave White, Tom O'Brien again. Today's Thursday. Of course, you get Andy at the end, 5 o'clock hour. So let me just do this. TLT 125.28. When I said to subscribers to my opening call, I suspect that if the TLT goes into the 126s, we're going to be looking at market, the chance of money coming out of equities for a little while and going to the so-called safety of bonds. Look how it held the 200-period moving average. This is the Lehman 20-year T-bond fund. That's very good action so far. We'll see what happens. Then I had a question about CL. So this is crude oil. And crude oil right now is making a peak D, but it's still holding very nicely. It's in a leg D in the weekly chart. It's accomplished almost everything that we discussed. It didn't quite make it to the, this is the continuous contract, to that high that I was looking at, 55.92 back on the week of the 14th of April, but it certainly got up to the 55.22, very close. And so it's done everything, but it's still acting very nicely. The MACD and stochastic are holding very well. So I think crude oil can go a little higher. The next thing is I want you to do a question about, TLT, crude oil. Yes, Home Depot. So something about cap. This is a part of the tax proposals. So down, Home Depot's down 270 at 168.68. This is part of that whole rotational thing. And what's really important about the rotational thing is that even within a sector, as one particular group pulls back, another one has been able to take its place. And at this particular point, we will know within another 2 days whether or not the XLB, I think it is XLB, the select materials, which made a peak E and is pulling back here, is that going to be impacted? E in the weekly, in the daily, Chapman Wave potential peak E coming up tomorrow in the weekly, and a leg E. And this is one of the reasons why I'm saying I think that when we finally do get that pullback and you start to break certain levels for the Dow at 23,250, it's really 22,150. Once you take that out, more selling will unfold. But in the meantime, you've got this rotation going on. It's very important. Didn't have a chance to get to the TZA, that's the IWM, and the answer to that is, Tim, if you're interested in shorting, yes, you can, but it must be a small position in the TZA. And I would say if the 149.69 level in the IWM is hit, get out of it.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.